love that setup on gold. I want to take that trade too, but let me go get my laptop from my car. You know what? I left my jacket inside. Is that Santa's? Oh my! Oh, not again! Let's talk about today's live stream sponsor, ProfitX. ProfitX allows traders to get up to 1.2 million in simulated capital for their trading. But on this simulated trading capital, you get an 80% profit share of the simulated profits. That's real money on simulated accounts. They also offer unlimited trading days to their traders, so there's no kind of number of trades you can or can't place during the duration of your challenge. They also allow their traders to trade 800 plus assets, so you can pretty much trade anything with this one prop firm. When we look into sponsors for this show, we do also make sure that the team behind the scenes seems as professional as possible. This is a big team, not a kind of influencer or solo run ship. This is a professional team running ProfitX, so I want to encourage you, check them out, do your own due diligence, and see if this is the right firm for you. Now back to the stream. All right, guys, welcome back. Happy holidays to everybody. Counting down the days here until Christmas, and taking a look at some yen stuff here this morning. I was actually just marking up. I'm closing out of a trade here. I just took profits on my Aussie yen short position, and I'm writing it up for members. Basically, I closed this for a small profit. Yen buying was significantly slowed in the latest COT report, and risk on market sentiment still seems prevalent for now. Negative swaps also make this currency pair less attractive to hold shorts for extended periods. I will wait for a stronger edge finder signal plus COT to show more yen buying before reconsidering this position. Profits locked in for now. Okay, yeah, so I'm closing out of this yen position that I've been in. I mean, it's not a big win for me, but I took a small profit here. Basically, what I noticed here looking at the commitment of traders data was, recently I've been pointing out that, you've had this really significant increase in short positions in the Japanese yen, right? Yen shorts. But then the latest round of commitment of traders data kind of killed my idea. Take a look at this. If we take a look at the latest commitment of traders data, I'm sorry, I'm looking at US dollar, but it is also true for the Japanese yen. Hold on. Japanese yen, right? So if I pull up Japanese yen, here's where we're at. So we've had this significant and consistent increase in longs on the Japanese yen futures. So yen longs. At the same time, guys, we had shorts closing, institutional money covering shorts. And then I looked at the chart here for the latest data, and it kind of completely reversed my theory on this pair. And I actually made good money short this. Like, I actually played this decently well. I made money, 2 different trades, profitable on both positions. Yen long contracts were rising, short contracts were falling. And then this latest one just kind of reversed that course. So I said, you know what? Holding yen long positions generally is costly. The Aussie yen overnight swap is very negative because you're borrowing from a high yielding currency or central bank, the Australian, the RBA, versus you're going long a very low yielding currency. That is why in your Forex brokerage account, you'll see negative swaps when you hold the Aussie yen or the pound yen, the euro yen short. and why you'll also see positive swaps if you reverse that trade and you go long things like Aussie against Japanese yen. So I actually made money on this drop, and I sold right near the top, just closed that for a very, very small profit here this morning. So I made 2 profitable trades on the Aussie yen. I can't complain, but I'm just going to wait for a better signal because now I don't see the same clarity on that setup. Hey, James, good to see you, man. Hi, Nick, and everyone. Can't stay, but wanted to wish you all a Merry Christmas. Merry Christmas to everybody here watching the stream, as well as James and all of our A1 trading contributors. I was sending out some nice messages to our contributors this morning. We have many different people who come on the show and make this show possible. It's been a remarkable year for the A1 Trading Show. For those of you guys who are regulars, then we've had an expansion of contributors that come on the show. We have people from all over the place. Ivan, Miko, Marco, Chris Pulver, Kenzo, Tom. I mean, we've had just so many great live stream contributors here making this show a lot better this year. I mean, we've really, really improved the show, and it's been awesome to watch over the years of doing this, just how much better it's gotten over time. And I want to say too, just in the spirit of the holidays, a big thank you to you guys who are watching at home. We've only got 263 people here today. It's going to be a quieter live stream. People are winding down for the holidays, and this is maybe just a good chance. Yeah, this is we're on Starlink right now. I'm going to go ahead and say it. Starlink is not perfect either. And I set up my thing. If you're not familiar, so Starlink sends you, here's my drawing. They send you this little thing to stick on your roof, right? There's your satellite dish. It's just this flat thing, and you go stick it on your roof. And the only thing is the default kickstand setup is not great. So I actually just ordered another thing. Hopefully the internet connection is okay today. Is the signal coming through okay, guys? Let me know. Anyways, I got the Starlink. Starlink is here. It's faster than what I had, but it's not like lightning fast. But I think that also might be the way I have it set up. It's currently sitting on this part of my roof, right? Here's my roof. It's sitting on a kind of slanted flat spot on the side. I ordered a mount, and you guys are really getting the behind the scenes. I ordered a mount that will do this. So it sits on the roof and does your Starlink like this. Gosh, my drawing today, phenomenal. Okay, so this is where we are right now. Step 1. Step 2 is when this mount comes in, we'll get to step 2, and supposedly the connection should actually be improved because it has less obstacles around it. But currently, how are we looking, guys? Is it okay? Connection okay? By the way, for those of you who are in the Discord, I just updated a Forex trade that I'm in. I had a short on the Australian dollar against the Japanese yen, and now I just closed it for a small profit. I'm still long Bitcoin. I'm still long the NASDAQ. I'm long semiconductors. My positioning is very risk on right now. Although I do still have some cash sitting on the sidelines. NASDAQ looks okay to me. Really nice. If we take a look at the weekly chart, I still think that the weekly trend is intact to the upside. You had a little bit of a challenge to this trend last week. And had we closed super red, breaking through support big time, then I think you have some struggle. Now, if we take a look at this chart and we just say, look, where is this uptrend truly broken? Well, what we can do here is we can look for, in fact, here's one of my favorite things to do. Let's get an RSI out. If you ever want some pretty straight up solid ways to judge if a trend is, really truly broken, this actually might not be the best example. Let's look at the daily chart. That might be easier. So the daily uptrend. What I like to do is I like to use a 4-period RSI. There's nothing magical about it. It just gives me a visual cue of divot lows, right? So there's a low. And then we can say, okay, here's a low. We can say, here's a low right here, right? And then we can say right here, we actually put in a low. So where is the daily uptrend broken? Well, the way I like to see it is when you have something that rounds off the bottom of the RSI, that is a key level of support, right? There's a really easy way to take with you for the Christmas holiday, go do your back testing, play around with the RSI 4-period. You can choose a 7, whatever you like. I like the 4-period RSI for this exercise. This shows me, and what you'll notice, guys, take a look at this. All of my key zones usually coincide with RSI oversold statuses. You can see all of my zones pretty much align. That's how I draw my zones. It's not magic. It's not perfect, but that's what I do. That's how I mark my key levels on a chart. So if we come back and we can't hold these gains, then my opinion would be NASDAQ uptrend on the daily chart is challenged. Now, the issue is when you look at the weekly chart, if you repeat that exercise, the NASDAQ uptrend is so far from being challenged unless you break this level here, right? By that same exercise, here's our key level there, right? So we could see price come down for a few weeks, still be in a secular overall upward trend on the NASDAQ. And as long as we don't break that level, 18,000, let's call it, I remain bullish. Okay. So I am continued. I've been bullish on the indices for most of this year. I had some caution on this recent rally that ended up being a very decent idea for me. What I mean by that is that as we screamed up every day with no pullbacks, I stayed very cash heavy. And that ended up working out very nicely for me because then I was actually able to deploy some cash after the drop. Again, this could drop further. I do have more sitting on the sidelines cash-wise. And if we take out those lows, that's my stop out point. And then I look to probably try again here, try again here. Does that make sense? Does that help on the NASDAQ? That is my take on end of year bullishness on the NASDAQ. I also have a position on Bitcoin. We can repeat the function here for Bitcoin, right? RSI, oversold area here. We're still finding our low, right? But what I'd like to see is this thing to pop back in, right? Market turn up. And as long as we can hold those gains, we're still in a very solid uptrend on the daily chart, right? We also have a key level here. So this key area is where I say we stay bullish on the daily uptrend chart for Bitcoin. Okay. I like Bitcoin. I'm long Bitcoin. I am not a crypto hodler per se. I'm just trading it. I like the uptrend. And if it breaks here, then I stop out. Okay. So that's my opinion on Bitcoin and NASDAQ, 2 positions that I currently have on myself. I also want to just ask, is this anybody's first time to the live stream? If this is your first time, just type like I'm new to the stream or let me know in the chat so we could say hello to you. So it's a great time to be joining the stream here right around the holidays. This is a weird week, guys, I should mention. Oh, if you're new, I just want to say Nebuchadnezzar, is that the biblical name? Nebuchadnezzar. It's kind of a crazy name if you think. Nebuchadnezzar am I saying that right? In the Bible, that is one of the hardest names I think I've ever heard. The Babylonian king. Absolutely cool name. Nebuchadnezzar, right? Is that right? Coolest name. Dude literally was like king of the city of the Hanging Gardens. If you know your history, Babylonia, cool historical period. Nebuchadnezzar. Now that, somebody better make that their gamer tag. Nebuchadnezzar, like all caps, the Chad part. Oh, that might be the coolest. That might be the coolest gamer tag I've ever heard. Sounds like a villain name. Yeah, I mean, it kind of does sound like a villain name. I'm stealing that. Yeah, like that is actually low key. So Nebuchadnezzar. I think I might use that. That is kind of a really awesome gamer tag. Anyways, if you're new here, thank you for tuning in. Hope you're doing well. What we do on this show is we talk technical charts, we talk fundamental charts, and I really try my best to give you guys a more comprehensive, full look at the charts. A lot of people that you're going to find on social media, on YouTube, they don't really incorporate the fundamentals. Some of them do. There's some great other content creators that incorporate fundamental analysis into their trading. But for just a second, what is fundamental analysis and why should you care? Well, if you have been indoctrinated by financial YouTube, financial Twitter, what you'll notice is every single person stares at technical charts day in, day out. Everybody's a technician. And if everybody is a technician and almost everybody loses money, my opinion, and it has taken me really far in my personal trading career, is don't just be a technician. Be a technical analyst that also incorporates some real trend creating forces, aka the fundamental analysis component of this. If you don't know what fundamental analysis is, it's the real world. I like to think of fundamental analysis is like the practical, real reason markets are moving. Technicals are just a reaction to the fundamentals, in my perspective. Some people love to say technicals lead the fundamentals. I advocate heavily the other way. I think fundamentals are the story. They're the reason markets go up or down. For example, if you have a really good jobs print and the market was concerned about recession, that's going to make the stock market rip, right? If they're scared about recession. If you understand that, you can quickly act upon those trends that are forming in the market. So right now, when I go look at some of the economic data out there, on Friday, you may be wondering, well, Nick, explain the fundamentals for Friday. Well, what happened right here was we were panicking following Jerome Powell. Again, real world stuff was impacting the charts. Jerome Powell comes out and he is super hawkish. He says we might not be cutting rates very much next year. Inflation's, an issue again. We're struggling with that. And people started freaking out and selling the NASDAQ, started selling the stock market heavy. But then on Friday of last week, we had a really key inflation number that came out. The core PCE number, personal consumption expenditure. It's another form of CPI, consumer price index, right? Basically, when you have inflation numbers that the Fed really looks at, which is the core PCE, they really care about what that PCE number had to say. Well, it came out pretty dang good. And the market said, okay, we're okay here. We don't have to freak out. And the market ripped. Now, since then, it's come back just a little bit, and we've had some wobbliness to this. But I do think that the trend that we have seen this year, which has been the Fed has been cutting rates, but more importantly, the U.S. economy has just been killing it. We have seen a lot of strength in the U.S. economy. We've seen inflation mostly coming down, right? Let's look at that. Let's add some visuals to what I'm saying so that you can actually see it. Inflation in the U.S., we've selected USA, but you of course can select other things within the Edge Finder, trending down. Yes, we've stagnated a little bit here. We had some progress. We had some upturn. But let's think about this. The overall trend here is still down, right? Trend to the downside for inflation. Okay, great. Jobs data. How are we looking on unemployment rate? Are we looking scary? Well, maybe if you looked at this chart and you said, "Oh my gosh, it's going up." Yes, but let's remember something. I always point this out when I show you this chart. The long run average unemployment rate in the United States is 5.7. Where are we at? 4.2? This is okay. We're not in crisis territory. And it's not like unemployment is ramping straight up, right? We're seeing unemployment stay relatively flat the few last months. In my opinion, right now, we're okay. Now, something could change. Something could come along. You could have, some sort of geopolitical event. You could have some sort of disruption to the global supply. Something can always come along in the markets. But in my opinion, right now, things look okay. Markets, in my opinion, are poised to continue going higher until you get something that really, truly changes that narrative once more. Right? So that's my point is, keep an eye on the economic data. Keep your eye on the ball, right? The overall story has been a nice rebound in the economy following the COVID pandemic. Inflation has come a long way. Jobs growth seems decently healthy. And, hey, like it or not, I think Trump returning to the White House is a very positive catalyst for stocks. Again, whether you like Trump or not is irrelevant to this conversation. Trump is very pro-business. He plans to cut taxes for businesses. Whether or not he gets that done, I don't know. But the point is the market sees Trump as a positive catalyst. The other thing that Trump's wanting to do, not just Trump, but like Republican kind of standard, is he wants to reduce regulation and restriction on businesses so that they can kind of just run hot, right? Think about if you're in the world of, the most obvious one that I can think of is financials. Financials have had a ripping roar here in the last, several months. Financials, if there's less restrictiveness to this, what we might see happen is the return of, do you remember in 2021 when there was all these sort of SPACs and IPOs and companies coming public? Well, that really has died off in the last few years. But the proposition of a return of Donald Trump is that with less restriction on, mergers, acquisitions, IPOs, all that stuff, the banking world could see a return finally of the IPO world, right? You might see more businesses coming public again, more businesses buying each other up, right? If there's less concern about, the government stopping mergers and acquisitions, then companies can get really big, really strong, really profitable. So there's this excitement about that in the financials world, which is why financial companies, which administer a lot of these things, are flying high. I actually like financials a lot going into the new year. I've been looking for a bigger pullback myself to potentially get involved on that. So I think that there's some optimism around certain areas of the market. The NASDAQ has come back a little bit here, but since that November 5th, you can see it's just been up and to the right for the most part. So again, we'll see how that plays, but it is, there's also other dynamics. There's people who are concerned about tariffs and, whether or not that will be a major headwind to the markets next year. And who knows, maybe it could be, but I think that that's further out for us. We don't need to be, in my opinion, don't need to be super worried about tariffs right now because we don't know how restrictive they're going to be. We don't know who gets impacted by them. We don't know how much they get impacted by them. Right now, what we do know is that there's just overall a feverish buying frenzy going on in the markets. And trying to call the top of that is really, really difficult. So for me personally, I'm keeping a stop on my trade and I'm staying risk on. You've got certain indices that are working better than others. The NASDAQ's working a lot better than the Dow Jones, for example. Dow Jones has been really struggling here recently. held down by some key names like United Health Group, which is actually, how is United Health Group doing today? United Health bouncing a little bit. So you're seeing some of that. Russell also really struggling. Again, inflation is still a big concern for the market going into the new year. That's why I think you're still seeing the dominance of some of the big tech names that have so much cash on hand, right? Apple has more money in the bank ready to go than possibly any other company on planet Earth, right? So they have a lot of cash reserves, so they're a little less sensitive to borrowing costs staying high. So we'll see. Let's take a look at gold. Also, gold has been a really boring chart in the last few weeks. We've seen just a lot of sideways market movement. If you've been a little frustrated by gold's price action, then you're not alone. A lot of people, myself included, have been waiting for something to show a little bit more decisiveness, right? Seems like we're finding buyers around this area, 2575 to 2600, but then sellers have been really coming in every time you get up into the 2700 range. So for me, with gold from a price action perspective, I'd like to see a more decisive breakout on the daily chart before I really jump into anything. If I take a look at the top setups algorithm as well, which is looking at a lot of technical sentiment and economic data right now, then what we're seeing here for gold specifically, let's just filter for metals. So if I take a look at metals, you can see gold is just smack dab in the middle with a neutral reading. COT data still looks positive, but then a bunch of stuff, strong economic data, is making the dollar look really strong and maybe gold not so attractive. In fact, I actually kind of lean bullish on the dollar right now, which is another reason why I struggle to get overly bullish on gold at this time. I mean, look at the dollar. You want to talk about a chart that's working? The dollar is working, right? It's putting in work right now. Didn't even come back. I was thinking we would test this area, 107.5. Dollars up again here today. Yen is down, dollars up. Euro dollar, pound dollar, everything kind of resuming trends, it seems. Euro dollar's back lower, pound dollar lower, Kiwi dollar lower. How are yields doing? Yields are up a little bit here this morning, putting a little bit of pressure on TLT. I do have a bullish position on TLT, so that's been not the easiest trade per se. But again, gold kind of just staying flat, right? Really, really just staying back and forth. Can't seemingly find its bearing, if you will. How about your HK50 trade? Yeah, let's look. It's been really, this one's been so painful. In fact, actually my plan today is to sell some more calls on this one. So I have a position on MCHI. It is, it's just been going sideways. Really no directional bearing for this chart. I would like to see, this thing find some strength. And I do think that there's a good chance that we see some rebound in the Chinese stock market next year. With the U.S. economy looking really strong, I think that that's going to trickle somehow into the, the Chinese stock market. It's going to go one way or the other, I kind of think. You're either going to have the Chinese slowdown economy stuff negatively impact the U.S., or you're going to have the U.S.'s really strong economic data right now potentially positively impact China, right? Inevitably, we're a huge consumer of Chinese goods. So is the rest of the world. So yeah, we'll have to see. I think that's going to be an interesting story in 2025. Let's take a look also at some sentiment indicators here this morning. So stock market indicator here, the put to call ratio. I mentioned this yesterday, or actually last week. We are planning on adding some put to call ratios for things like gold, oil as well. We're going to add, I think we're going to probably try and add the Qs, the NASDAQ, right? We're going to add some more put call ratios. These ratios can actually be constructed for other things, and we're going to have those in the Edge Finder at some point. We're really excited for that. That's a project that's on the books for going into 2025. So anyways, put call ratios up here recently. A little bit of fear crept into the market with that big Fed day sell-off. We'll see where that goes from here. We were kind of just at the bottom of this range, really, really optimistic bullishness in the markets. And that thing popped back up. That was actually, for me, a good signal to start building some positions on risk assets where people are getting really afraid. I actually love that signal for a time to potentially get long some stuff. Investor sentiment, let's take a look at where people are feeling the stock market. You can see it actually really shifted. We were really bullish early December. And then slowly investors have signaled that they're feeling more cautious, right? So this survey asks people, how are you feeling about the stock market? You feeling bullish, neutral, or bearish? And the bearish camp hasn't necessarily risen that much, but take a look at how we've seen neutral readings significantly increase. So more people are a little bit cautious about the stock market than they perhaps were a couple weeks ago. And I like that, right? I don't like buying the stock market when everybody is super, like feeling super confident, right? So we've had a little bit of a decrease in sentiment. Great signal to me to potentially build some long positions, as I do remain really bullish. So let's see, retail sentiment, another good one. I love this one for currency pairs especially. So we'll let that load for a second. Okay, so if I go major currency pairs, we're just going through all the sentiment indicators today. So we still have retail traders really short things like dollar CAD, really long things like euro dollar, Aussie dollar, Kiwi dollar. So we know the crowd is betting heavily in favor of some of these downtrending currency pairs, or betting heavily against this uptrending currency pair, the dollar CAD. So that continues to be a contrarian signal, and that's been a really good signal this year. If you've been watching retail sentiment this year, it's been phenomenal at calling trend continuations. So retail traders have been long the euro dollar for months now, just getting absolutely beaten up by this euro dollar downtrend. So keeping an eye on sentiment is one of my favorite things to do. I do it all the time because it can be so useful. Okay, if we know everybody's trying to call the bottom on euro dollar, the easier money, in my experience and opinion with this stuff, is staying bearish against the retail crowd. It's not as easy as that. It's not always a perfect indicator. Sometimes the crowd is actually right, but a lot of times they're wrong, especially when you get these big trends. It's so interesting how retail traders will just bet against this trend over and over and over. And that's actually a signal a lot of times to just ride the wave, go against that crowd sentiment, and just make some money on that side. I mean, that's been one of the easier plays this year. By the way, if you guys do not have the Edge Finder and you would like to try it out, we do offer a 30-day trial for the Edge Finder. If you would like to get 30 days access to the Edge Finder, we'll drop the link here in the chat for you right now. If you click this link and apply for a trial, we'll get you that information sent over to your email so that you can find out more. We have thousands of people using our tools all over the world. The Edge Finder has had a really good 2024. We've made a ton of improvements to the tool. We've had so many new people start to use our tools. This year has been an absolutely phenomenal year for A1 Trading and what we do here, both on the live stream and content side, as well as the software side. We've built so many new features. Our team has been really working hard to just make this thing the best tool out there on the market for traders looking to get sentiment indicators, seasonality indicators, economic data scans, all of it in one singular platform. If this would be useful to you in your trading, as it has been for thousands of people all over the planet, then I encourage you, especially during this holiday break, if you have some time to look through stuff, I know a lot of people have time off, take advantage of this trial. It's 30 days access. You can just hit that link, apply for it, and you can check it out for yourself. I do want to mention that we do not offer a free trial. It is a trial. So you can pay for 30 days access. It's a small fee. It's half off to try it out right now during the holidays, and you can see if it's right for you. The reason we charge a fee, I always mention this transparently. I have real people who work full-time jobs who administer those trials. They answer questions. They step people through the software. They make sure that they're good to go. They follow up with them. There's payroll that I'm paying for people to try out our tools. If that is something that you're interested in, if you're serious, if you want to try our tools, hit the apply link right there. It's just 99 bucks for 30 days access to the tool. And that payment gets credited towards your final purchase if you decide to purchase the Edge Finder for the one-time lifetime price that we offer. So if you want more information, if you want to start using the tools that we've built here at A1, click that link, apply for it, and we will happily get you some information going on the tools that we offer. We're a software business out of Atlanta, Georgia. We launched the Edge Finder in 2022 and have been just constantly improving it. There's a team of 10 people total behind our entire operation, and we work tirelessly to make this the top software tool on the block for traders looking to get more data. Georgiana, I saw your message. Thank you. I've sent a message for the signal service considering holiday times. When should I expect contact from your team? Florin, thank you very much for the message. So our support team is just getting back. We're back in the office today, or not in the office, but we're back online today, and then we're off for the rest of the week. You should get a message pretty soon. But yeah, we are not on the weekends, but we're back on stuff today. So let's see, how are we doing? NASDAQ pretty flat here today. S&P slightly red. Dow Jones down 0.5%. Russell's down another 0.6%. Russell cannot catch a break, it seems. Yeah, really interesting. New Zealand stocks and NZD could be really sensitive to seasonality. It's its economy highly based on farming products. Can we look at seasonality for NZD, please? Yeah, let's look at it. So if I take a look at seasonality, month of year, and let's search up NZD, and let's go for the NZD US dollar. So December, here's an example of when seasonality does not work great. And this is a tough year to look at because the dollar has been so dominant against everything. So December, historically speaking, is usually a positive month for commodity currencies, it seems. The NZD USD usually rises in December, and it did not do that this year. You can see down quite a bit this year for the Kiwi dollar. So yeah, I mean, for me, this is just an example of how seasonality is not perfect. Nothing is. No indicator is perfect. But yeah, I mean, this is going to be interesting to see how this goes into next year. We have some slight positive expectancy in January. So yeah, I don't know. The Kiwi dollar and the Australian dollar are really tough for me right now because they have just gotten smacked down off of, you know, what has been a relatively weak Chinese economic data, right? So the Kiwi dollar and the Australian dollar are sensitive to China because they're big trade partners, right? They produce a lot of, as you mentioned, agricultural products as well as, you know, minerals, materials, things like that. That's a big part of their economy, and they do business with China heavily. And China, if China's the buyer and the buyer's really weak, we can see that, you know, Chinese government bonds, the yields have been falling off a cliff. That's usually an indication that the economy is under a lot of stress. So that's been probably weighing on the Australian dollar and the Kiwi dollar with some correlation there. So really, really interesting. I've noticed on the Edge Finder, whenever there's a very bullish or bearish reading, there's not that many entries for technicals. Justin, yeah, that's kind of the reality of trading. When you have everything line up, it's rare to get the right setup. But you know, that's why I don't take a bunch of trades. I take very few trades. I try to, I know this is pretty intuitively obvious, but I try to take a lot less trades, just higher quality ones. I found that over time, I've drifted further and further from the lower time frames, more towards the daily chart. I wait for those setups. Sometimes that waiting can be agonizing as nothing is setting up. But then when I get the right trade set up, it's a lot better if I wait for the quality stuff than just force a bunch of trades. So yes, the truth is, yeah, good trades are rare. Good trade setups are hard to find. You can go out there and you can start trading everything up, down, sideways. You can start really firing a lot of shots off in the market, but I found that less trading is a lot better. If I can place less trades but higher quality ones, that makes my life a lot easier as a trader. If I'm out there taking 15 trades a day, trying to scalp the you know, NAS futures, that's just not for me. That's not a profitable way for me to approach the market. For me, I like using the fundamentals and I like waiting for proper setups. Again, had I chased this thing off a cliff, I would have really regretted that. I waited cash heavy on the sidelines, got my entry, and this thing could still roll over and take me out for a loss, but I'd still be much happier. I know this was the right trade for me to take. I know that was the right setup for me. I had a NASDAQ bullish setup on the edge finder when I took the trade, put my stop loss, just narrowly missed getting stopped out. Price reversed higher. I know I'm supposed to be in this trade, and I love that feeling. Sometimes you just know I'm supposed to be in this trade. And the worst feeling in the world is when you say, I was not supposed to be in this trade, right? If I can avoid that experience as much as possible, my P&L is probably going to look a lot better overall, long term, not short term. Not every trade is a winner. Sometimes you can have a great setup that results in a negative P&L. But for me, if I can just get into trades and say, I know I was supposed to take that trade, I sleep well at night. That's what's so important. Now, the other thing is, even if you take the right trade, you can screw it up by taking too big of a size. You can, there's just so many mistakes that you can make as a trader. That's why it is deceivingly difficult. Like, it seems easy, but it's very difficult to become profitable because there's so many things that you can mess up to really, throw off your P&L. So for me, I know I was supposed to take this trade. I also know I wasn't supposed to take a massive risk on this trade, right? So I have a trade set up here. And if this market rips, then excellent, I'll make some good money. And if this market falls apart, then that's fine too, because then I waited. At least I didn't chase this thing. Now with the pullback, I have an entry. I have a stop where I know I need to get out, and I can try again at lower prices and be happy to try again, knowing that I didn't, I got to keep some dry powder, if you will, right? I've got dry powder ready to go if the market continues to go lower. And again, that's how I stay relaxed with this stuff. I'm not stressed out, pulling my hair out, because I have a plan. I have risk management, reasons for trades, a system that helps me spot trades. Again, there is no way I could do this for as long as I have without the systems that I've built. The Edge Finder helps me find trades. My risk management system or model, whatever you want to call it, makes sure that I take appropriate size on trades. My technical system tells me when it's time to enter a trade, but you cannot have one and be successful. For me, I have to have all three. Okay, you ready? Here's all three. I have to have the engine. I like to think of it as an engine. The Edge Finder is my engine. Okay, the engine of my approach to the markets is my why. Okay, and I know I've said this. If you've been a regular stream viewer, you've seen all this before. The why behind my trade. So a lot of traders are purely technical, and that's cool. Do your thing. To me, I'm not purely technical. That is a lot harder to make money in my personal opinion. I want to know, why do I want to buy something, or why do I want to short something? Before I even pull up a technical chart, before I start drawing fancy lines and support and resistance and indicators, all that, keep it off the screen for a second. Why do I want to buy the NASDAQ? Why do I want to buy Bitcoin? Why do I want to sell the dollar, right? Whatever I'm looking at. Why is the first question before you even pull up a technical chart. You're just tempting yourself if you pull up technical charts and you don't know why you want to buy or sell something. I don't know how people do it. There's so many people out there that trade completely technicals. Fine, do your thing. But to me, I want to know why this thing has value or does not have value before I even touch the buy or sell button. There's no way I proceed past point one. I have to have the Edge Finder. I have to have something that fundamentally helps me analyze why I want to buy or sell something. So many traders miss that step. They don't know why they want to buy something. They say, oh, the chart's going up. That's enough. Not enough for me. Not enough for me. Charts can trend up and be trending up before a big sell-off, right? I want to know, why is this chart trending up? Is that valid? That's the first part. Number two is, when do I want to get in? And this is technical analysis. So this first one is fundamental analysis. Fundamental analysis helps me derive whether or not something has value. Do I actually want to buy this? Do I actually want to sell this? When is technical analysis? So really simple, textbook technicals, support and resistance. Earlier in the stream, I was talking about my RSI trick that I like to use. Really simple stuff. So I look for support levels. I look to put stops below structure. stupid simple. Technicals should be easy. Technicals, in my opinion, a trader should be able to learn how to do technical analysis in 1 week or less. It's really easy. It's not that hard. The technicals, and I'm not saying, there's more advanced stuff out there, but I don't need that. I keep my technicals so easy that a 5th grader could do the same technical analysis as me. There's nothing fancy. So I say that because, and I'm so adamant, I know you can probably sense I'm a little heated about that topic. This is the biggest pitfall, in my opinion. Traders fixate on entries and technical analysis and coming up with fancy systems using technical charts, and they get lost in that. When I think that should be the easiest, most straightforward part of your trading. Shouldn't be hard, in my opinion. So here's the next part. So technicals, step 2, that's the when. When do I get into a trade? You can't have this part without this first part. Once you have both, okay, cool. You're 2/3 of the way there. The third component is how much, because here's the thing. How much / sizing is absolutely critical. And I should add to this first component, this is also sentiment. So why do I want to buy something? Involves both the fundamentals, GDP numbers, inflation numbers, jobs numbers, how strong is an economy, etc. But then also I like to look at what the crowd is doing. Is the crowd super bullish on this? Is smart money, institutional money buying this, selling this, right? Those are my whys. Then the when is technical analysis. And then how much / sizing is my risk management. Absolutely critical. Now, the thing here is, if you took out any of these 3, the system breaks down. Do you see what I'm saying? So technicals is when I get in, when I get out. That's my entry and exit. I like to trail stops. So my point here is, if you took out this, system is lost, no longer profitable for my approach. This is what I'm doing. I'm not telling you, you can't make money without this. But for me, if I don't have the engine, if I don't have the why, there's no profitability expected in my system. The technicals, if I took that out, then I don't know when to tell myself I'm right or wrong about a trade idea. I don't know how to stop out of a position that's losing. I need number 2. And number 3 is absolutely imperative. If I don't have proper sizing on my trades, you could have a great system for why and when, but if you don't risk manage properly, you're done. There's no trading is very quickly degenerate negative expectancy gambling if your risk and sizing is inappropriate. So this is critical. This is critical. This is critical. Why is trading hard? Because you have to have all 3 of these things on lock. You got to be top of your game on why you take trades, when you take trades, how much. And there's a 4th one that I don't really include in the list, but it's also very, very important, which is just your psychology, right? If you can't stay disciplined, none of this matters, right? Because again, the biggest thing, psychology, kind of fits in with number 3. What is the number 1 thing people who are reckless in their trading do? They go size up way too much. They go make a silly all-in bet on gold going down. And then gold pumps, and then you lose everything. You say trading's a scam, right? So I hope this was helpful to you. This is really important stuff to me. I can't explain it. This is the best I can explain it. This is the difference between profitability for me and not making money in the markets. Technically all 4 are critical. So if you're somebody who has a little bit of extra time during the holidays, I want you to reflect on what we just discussed here. Make your own list of 4 items or 5 items that are critical to trading success for you. And ask yourself, actually, can I ask you guys a question in the audience? I want to get your thoughts. Of this list of 4, type 1, 2, 3, or 4, which one do you struggle with the most? What thing do you think is the hardest for you? If you trade similar to me, if you incorporate some level of fundamentals, some level of technicals, risk management, and psychology, which is probably a lot of us, I want you guys to just real quick type to the audience which thing you struggle with most. And I'm looking at the chat right now, and what I find fascinating is that we have a very diverse list of numbers. 3s coming in, 2s, 4s coming in. People are struggling with a little bit of all this. So my point with showing you that is, think about that. Everyone is struggling with a little bit of, what that tells me is that all of these things are hard. AKA, that's why trading is hard, right? Trading is hard because all of 4 of these are difficult. Technicals are, in my opinion, made more difficult than they have to be by traders because they want to go find fancy strategies online. They want to go find something that has, I'm not dogging on SMC, but a lot of people love SMC because they think that's some like glamorous, magical, more complex way to approach the markets. When in my opinion, maybe that's perfectly fine for a very small minority of people that have, used that structure, that mindset in the markets to actually find profitability. But for most people, you're just overcomplicating a subject that we should move on from within 1 week of trading learning. Within 1 week, I think you can learn all the technical analysis you need to be a profitable trader. 1 week. I don't use anything fancy, nothing proprietary on the technical side. I use the most basic support and resistance, trend line stuff. And you know what? I show you guys my personal trading performance almost every single month. I do a video talking about that. So before you say, well, yeah, you trade like a retail trader, I absolutely do trade like a retail trader. And I make money. I make money in the markets. Long term, I've showed you guys my account. I have a track record that goes back from 2020 until now. I'm not telling you that to brag or tell you I'm the greatest trader in the world, because I'm not. There are people who do better than me. But I'm telling you, I have reached profitability using the stupidest, simplest retail trading strategies that everybody says, oh no, that's just, you trade like a retail trader. Well, retail traders can make money. It's just that most don't. So something to think about. Consumer confidence came out. Let me check that out. So we had, oh, look at this. Market's down a little bit here this morning. Did consumer confidence come out today? Yeah, it did. 104.7. That's going to cause a little bit of a hiccup here. Consumer looking a little bit weaker than what was expected. So you've got NAS down just a little bit here. Russell or S&P's down 0.4. Dow Jones down 0.7. And look at that. Russell back down towards the lows, down 1% here this morning. My goodness. Little bit of a sell-off there. Russell has been really getting beat up here recently. Got Russell down 10% from the highs. That is a certified correction here for the Russell. And this one's difficult for me. The Russell is difficult to try and call a bottom here on this. Interestingly, that I actually would have expected that to cause a little bit of an uptick in gold. But nothing there for gold either. Gold down as well. Again, gold been a really, really frustrating chart because it's just so choppy. I've not really been trading gold too much. I have one position on GDX, a bullish position on GDX, which is not going super well. But this is one that I'm looking to dollar cost average in. If I can build some longer term positions in GDX, I'd be fine with that. And it looks like I might need to do that. So if the trend here to the downside continues, then I will actually look to build a bigger position in GDX. VIX is up 7.4% here, a little bit of a bounce back in the VIX. And I'll tell you what, I actually don't mind the idea of potentially actually buying some stuff this morning on this dip. I am quite bullish overall. I think you stay very much okay in this uptrend as long as we don't take out these lows. If that happens, then I've got to wait for deeper prices before I can look for longs again. But yeah, I think I might look at some stuff here this morning. Let's see what some sectors are doing out there. Consumer staples, look at that. Down 1.8% here. Utilities down, real estate's down. I might actually need to take another stab at my real estate long positions. If we come down to the 39s, XLRE is a real estate sector ETF. Energy, my goodness, man. ExxonMobil is a trade I've been trying to play. This is going terribly for me. I mean, not terribly, but you can see I've got a losing position on Exxon. I bought some Exxon shares. Definitely too early, but looked like we might have been forming, some bottom in this area. We might find some support, but Exxon just taking a bigger fall here. Actually wouldn't mind getting a bigger position filled on Exxon. So if we continue lower, I may actually get to build a longer term, bigger position in ExxonMobil. Pays a nice dividend too, I believe. Yeah, you get 3.74% per year for just holding Exxon. So I don't mind keeping a little bit of funds parked in Exxon at this time. Basic materials down 1.3, software's down 1.2, and semiconductors. Hey, we'll take this. My the one green here on this list, semiconductors doing okay. I believe Nvidia is popping here, so I've got this long position on semiconductors. Financials, if those keep coming down, I might need to start scooping up a position in that. XLY, consumer discretionary. Yeah, everything's a little bit red here this morning. I like that as an opportunity to potentially build some positions. If I take those trades, I will share them inside of our Discord channel. If you guys are not in the Discord channel and you'd like to join, we share all of our trades. You can apply for the free version if that's something you're interested in. We'll drop the link here in the chat. You can apply for our free Discord channel. You can see some of our daily analysis and things that we're putting out, market ideas, things like that. If that's something you'd like to join for free, here is the link to apply for that. Click this link, apply for our Discord. If you're trying to get better at the fundamental analysis side, we do a lot of fundamental analysis breakdowns within the Discord. So make sure to join us if you have not already. Yeah, a lot of stuff actually showing up here on the potential bullish side for me. I think, again, I'm going to give this a stab here at looking to get long some sectors here. I like healthcare. How's my healthcare idea doing? Probably not well. XLV. Okay, healthcare's down 0.5%. I'll take that when you got other things down more than 1% here today. Healthcare is a sector that I have a position on. You can't see it on here because because Weeble's options integration with TradingView doesn't currently work, but I do have sell puts on XLV. So if this thing continues to trend lower, I will be assigned and would not mind that. I think XLV is a little oversold. Anyways, guys, we've got our next show host taking over here for a little bit. Look at that. Market's trying to bounce back a little bit. Some crazy volatility here just this morning, just in the last 15 minutes or so. We'll see if that carries over, goes anywhere. VIX up about 7%. I'm going to go look at some things. If I take trades again, they'll be shared inside of the Discord channel. Make sure to join us. Link has just been dropped in the chat. And for those watching at a later time, it's in the description as well. Okay, guys, we're going to take a quick break to thank our sponsors, and then Chris Pulver's taking over the show. Stay tuned.
'Twas the night before Christmas, and all through the house not a creature was stirring. Except Chris Pulver, apparently, who just took a trade on gold. It's the middle of the night, I'm not really sure how he did that. Pulver alerts are now available at A1Trading.com. Get exclusive access to Chris Pulver's trades with A1 Trading's Pulver alerts. Watch as Chris Pulver, a seasoned trading pro, navigates the markets, manages risk, and applies a disciplined trading process. Join today to level up your skills and learn from Chris's wealth of experience. Get Pulver alerts now.
Good morning, everybody. How we doing? Happy Monday. Holiday trading. Markets off on little the heels for Wall Street, 0.29% down on the S&P, SPY's down 0.38, Q's down a little bit less, 0.21, Dow's down 0.64, continuing to have a lot of heat on the Dow. Russell down almost 1%, volatility up again. We'll take a look at all these things. Dollar index also gaining some strength. Oil still chop suey. Gold down a little bit. Silver flat. Bitcoin, I said 90K to 80K. We're still getting that pullback on Bitcoin. Interesting stuff there. MicroStrategy as well. So yeah, interesting morning. All right, let's take a look at everything. Okie dokie. So Just a quick thought on holiday trading. Right now we've got full day of trading today. Tomorrow, limited hours. I think most brokers are closing up by 1 p.m. Forex brokers close up early for Christmas Eve. Christmas Day, most things are closed. Take a look at the economic calendar today, or for this week rather, and you're going to see that it's mostly a holiday week. So, medium impact today. We had consumer confidence and new home sales out of the U.S. Tomorrow, Christmas Eve kicks in. We still have U.S. markets open, but like I said, most brokers are closing up by 1 p.m. I think futures market closes early. Equities close early. Most brokers wrap up around 1 p.m. Eastern time. Wednesday, pretty much everything is closed. Thursday, we still have some lingering Euro holidays. So just expect like lighter volume, maybe some choppy price action. Where I'm looking for a lot of these prices to go. I don't know if the market is going to have enough volume or volatility to get us into fresh lows, which would be below Friday's open, or get us back to all-time highs for the year. I would just expect price to kind of drift between these areas. And it may be like, maybe it comes down and tests the lows, then it comes back, or maybe it comes up here and tests the FOMC breakout point and then comes back. I don't know. But something tells me that there's just a little bit of kind of some market maker levels hedging going on, where there's not going to be a lot of like price disruption over the next couple of weeks. This week being Christmas, next week being New Year's, and it might just be a bunch of sideways mess, right? So just be prepared for that. If we do break the lows, that's okay. I mean, it's going to feel crappy to be, hey, I'm trying to enjoy the holidays and the market's taking a nosedive, 5%, 6%, 7%. That's not going to feel good. But that's why chart alarm is there. And I think I have a couple to spare. So I've got all-time highs. Let me set one here at the fresh Friday lows. So put a chart alarm at 50, it'd be 58.30. Fresh lows for correction. And that way, whether I'm at the computer or not, I know what price is doing, just checking the bigger levels. So that's SPX right now. SPY, same type of thing. Are we taking out fresh lows? Are we hitting some recent highs with FOMC or not? So you can see my price action right there. Okay. Equal weighted. Equal weighted, this is RSP. We're coming back into that 200 moving average. I mean, I'm a little tempted to throw in some trades. I'm probably going to dollar cost average into it once this is hit around 172. If it gets a little bit nastier though, because look, equal weighted has been taking a lot more of a beating than the S&P. This high to low correction, it's down about 7.5% off of the highs and currently sitting around 7% off the highs. I mean, we saw about a 4% correction on the SPY, and we're seeing almost an 8% correction on equal weight. So the reason I'm bringing that up is if we still have more room for the SPY to drop, then there's more room for the equal weights to drop. And maybe what would be nice is, okay, let's say that we get like a 10% correction on the SPY, but then we're talking 15 to 20% on equal weight. I mean, I like the discount of 10% on the SPY, and I really like the discount of 15 to 20% on the equal weight. But it does require a little bit more of a balanced market, but it just takes away some of the craziness we've seen. Like if Mag 7 starts to turn over and sell off a little bit, that'll affect the SPY a lot more than the equal weight, right? So just food for thought. Where are we at? Futures market, little choppy today. NASDAQ, here's the Qs, little choppy today. I'm looking at the SPY kind of rebalancing after a few points this morning. Dow. Okay, this is what one of the worst sell-offs in 50 years looks like, apparently. It's not that, it's that it had like 10 or 11 consecutive losing candles. The Dow has dropped about 6.6% and currently sitting just off the highs, probably around 6%, 5.65%. So is it the end of times for the Dow? Of course not. Where would I like to add some exposure on the Dow? Well, if we come back and find a moving average here, I'm pretty interested in, I don't know if this is a floor, right? I think if we go high, low, we took out this low, challenge the election gap. If we pull back again, okay, and we have one more flush, I'm going to measure that symmetry. It'd be high, low, lower high, lower low. And I'm looking at something along this area, okay, or maybe these August bottoms to kind of start averaging back in. So I don't mind putting some dollar cost average levels in on DIA. I don't mind doing some, Dow futures trading, but most likely DIA is going to be pretty simple. Just stick to, an ETF that's relatively cost effective, I wouldn't mind owning the shares. I don't necessarily want to. I'd rather just trade options, but watching those levels. Okay. Russell, probably the one that I'm going to stay out of this one for right now. Same type of thing. It's like it looks attractive because we're coming back into the 200 moving average, but that means I've got to believe that this uptrend, I'm not drawing that very well, but I've got to believe that this uptrend is still intact. And so this could potentially flirt with the break of the 200 moving average and then bounce off of this area. But I just think there's a lot more volatility in the small caps, especially when the market's looking ahead into 2025 and thinking, oh boy, the Fed just pivoted to go hawkish again. That's probably going to hurt the Russell. Okay. So anyway, that's where we're at. VIX, we had the second largest single day spike ever, and that was on Wednesday. Clearly things have settled down a little bit. It's naturally a reverting instrument. Do I want to get long vol? Absolutely not. Do I want to get short vol? Absolutely not. I'm just going to wait. I mean, long vol, I missed an opportunity. I was trying to get something around $12 and it came down to $12.72. Long vol, that's my trade, is all the way down here. Short vol would be like another, I don't know. We'd have to have like another big spike. So if we saw like a scare and we had a volatility event to the upside, like then maybe I get short vol. But other than that, I'm just going to let the VIX do its thing. SPXY still has some profit closing out there. SVIX, I'm staying out. Dollar index, I don't think this is the time to fight it. I think calling right now, like December 23rd, trying to call a top or bottom on the dollar is silly. If anything, this is already pushing. We swept all these previous highs. I mean, if the dollar right now has path of least resistance, the dollar likely just continues to move higher. That will probably weigh on gold a little bit. That'll probably weigh on Bitcoin as well. This may finally weigh on some risk appetite if the dollar continues to get stronger. It is going to make things tougher moving forward for multinationals. I mean, no big international company wants to see a stronger dollar, okay? Because it just makes more international business difficult. But I don't know where the top is on the dollar. I'm trying to be hopeful that if we want to see a fantastic trade in the dollar, it's going to be up here. And this serves two purposes. One is if the dollar goes up that high, there's plenty of good trading opportunities to continue to see dollar strength. And the second is I'd love to see a big fat topping pattern on the dollar and just short the living daylights out of this thing over maybe end of 2025 or maybe second half of 2025. I don't know. So this could be a big currency trade later in the year. We'll see what it does. Okay, oil. Oil is still this is still like the biggest story to me, and it looks very boring. Okay, but oil to me is still probably one of the biggest stories in how the U.S. is going to get through inflation, because we've seen September, October, November, and December all show higher readings in inflation. We essentially bottomed in September. The Fed is cutting rates, and they've cut by over or just at 1%. And the yields have done the exact opposite. The yields are pretty much up, 90 to 100 basis points. It's the exact opposite of what the Fed is doing with the cash rate. Meanwhile, inflation is trending higher. CPI, PPI, PCE, all higher. Okay. Oil, on the other hand, has not done anything. So I think that oil is a very big gauge for whether or not we have higher, uglier, more problematic inflation, or we have a little bit of relief from inflation. Now, core PCE is supposed to be excluding food and energy, but we all know that it's going to be a big part of everyday life. It's going to be a big deal for consumers. If you're going to travel, you don't want to have expensive gas. If you're going to commute, if you're going to take book cruises, or you're going to be traveling by air, it's like you don't want to see expensive gas because that automatically goes into your ticket. So we'll see. But inflation higher, inflation lower. I think oil is going to be really the story to watch. Gold and silver. I've been talking about this for the last probably month now, since we had our top in September, or November rather. When did that thing top out? Right after the election? Yeah, so right around the election, end of October into November's election, a bit of a top there on gold. It's still pretty choppy right now, right? So high, low, lower high. I still would like to see gold settle into a lower low. I'd still like to see some really nice support. I still maintain the outlook that central banks are buying gold. They're probably smiling that there's more attractive levels to buy gold, whether that's now or whether that's a little bit lower, there's probably going to will still be a pretty strong bid for gold, in my opinion. So if the dollar gets stronger, yeah, that's going to weigh on gold a little bit, but I still think, China and other central banks are lining up to still buy gold. The story right now is like, oh, well, if Bitcoin becomes this reserve, it's like, if is the big question. And I don't think that Bitcoin becoming a reserve in any way, shape, or form is going to be easy and fast. And on top of that, does it really damage gold? Not necessarily. I think gold's got a little bit longer track record than Bitcoin right now. And we'll see. We'll see. But either way, as a separate instrument just by itself, if the dollar gets stronger, it probably weighs on gold. I still like the 2,500, probably lower. I'd like to see 2,450 to 2,400. Then I'll start looking at position on gold again. Silver pulling back a little bit. Very well supported around $26. We might need to see silver do something like this. If it's able to get back up here towards like $32, and if we settle back in, that could be a nice little reversal pattern. And then silver still has legs to get up towards 36 this next year. All right. So I'm going to look for that type of reaction on silver. Bitcoin, I mean, not going to lie, symmetry was a pretty powerful thing. So I had a yellow box as my measure move to symmetry, pretty much to the point. We hit it. We've started to pull back. Okay. So I like the 90K. I like the 80K. I like those levels. Would I add some more? Yep. I'm going to add some more exposure. I'll probably add some more through my peripherals. I might just add a little bit more into my Coinbase wallet and my little cold storage wallet. Do I trade platinum? I don't trade platinum because Tacey's my primary futures broker, and so no, I don't trade platinum. I look at it. I've been watching palladium this year, platinum this year. They look fairly attractive, but I would only want to trade futures options on those, not just futures itself. But Tacey doesn't have it, so I like it. I'm not gonna go find just a future specific broker. So I traded on Interactive Brokers for a while, and Ninja Trader trades a lot of futures as well. But yeah, for just Tasty, I'm not in it. All right, Bitcoin area 90K to 80K. Looking to see how the bull market stays intact. How far lower could it go? Well, probably if we're going to maintain a bull market, probably not too much lower than 75. So if you're looking at some dollar cost average levels, 90, 80 to 75 look pretty solid. And we'll see if this maintains some type of trend line. Some type of trend line like that. What's that pullback? I don't know, probably 30, 40%. If we pull back to previous all-time highs, that's a 30% correction on Bitcoin. Okay. I mean, that's mild compared to what most Bitcoin traders over the years have experienced. So if we do bounce off of 75K, that's fine. It's a 30% pullback, and let's see if the bull market gets maintained. Okay, what else? BITO, nothing there. IBIT, probably going to put in, not yet. I mean, I'm going to watch my levels. I have these out for like 12-month credit spreads. If we come back into like Bitcoin spot price 90, 80, 74, 75, then I'll probably add in some credit spreads on IBIT. So I don't know if anybody else does this, but I watch Bitcoin and then I'll place my trades on my correlated symbols, right? So IBIT is trading like a, opening bell to closing bell ETF. So I can't just trade this all the time, but if Bitcoin's at an attractive level, then I will add my exposure to IBIT because it's supposed to be representing the spot price of Bitcoin, right? MicroStrategy, a little bit more volatile. Who knows what's going to happen here? I've already measured out a symmetry move. I took a small chunk out of that. I put $1,000 position on MicroStrategy. If it falls lower, I'll do another $1,000 down here. These are small dollar cost average levels. And if MicroStrategy comes down to this area, I'm probably putting in some more income trades like a 111. I might put in like an out of the money bull put spread. There's all sorts of ways that I see traders like, oh, they're generating all this income on MicroStrategies. Like that's cool until MicroStrategy, threatens one side or the other. So I'm cautious of a lot of extra volatility on MicroStrategy when in reality, Bitcoin is really what I'm trading. So I'm just trying not to get caught up in like, oh, MicroStrategy is like, it's better than Bitcoin. Not necessarily. It is Bitcoin with it's basically Bitcoin with a volatility wrapper. That's what it is. So volatility is good, but also it can be dangerous as well. So I'd rather just trade Bitcoin. And then if I like Bitcoin areas, then I'll start looking at MicroStrategy as a peripheral trade. But just be prepared for maybe a pullback into like 250, 240, or pullback all the way to these previous all-time highs. Who knows? So could be a wild ride on MicroStrategy. Anything in the Japanese yen? Let's take a look at currency strength today. So dollar getting stronger, Swiss getting weaker. That's got to bring my dollar Swiss up into some profit. We hitting 9,200 yet? Not yet. 89.94. All right, let's go, baby. 9,200 looking for that trade. Dollar CAD. Let's go dollar CAD. Okay, dollar CAD's getting closer to hitting my profit around 44.80. I think we get there. I think over the holidays, I wouldn't be surprised if my dollar CAD trade closes for full profit, and I would be much happier to see that from roughly this is close to 9,000 that we have another push towards 92. So dollar CAD, dollar Swiss looking pretty darn good for my currencies. And currency strength. This is the dollar just being path of least resistance, and this is your holiday drift on the dollar. All right, let me see something real quick here. I might throw in a quick trade on SPX. I took a small loss on it this morning. Let me just take another stab at it. Are we going to stay 59.70? Take a peek real quick. 59.70 is up here. I'd say 58.50 would be my downside. So if I do 58.50, okay, and then are we getting back up to 59.80? I'm just going to look at a 0 DT trade. All right, I'm going to take this trade. I'm going to try to get back $45 today. I'm going to take this trade. Hopefully I can get 40 cents for it. All right, I just took 40 cents. Give me 1 second here. I'm going to have a little comeback trade on the day. Get out of here. So, all right. Update. Okay, let me. Okay, and my other trade here, 85 still filling. Interesting how that one's still working out just fine. Here we go. $85 call. All right. 58.45 put. So the trade that I just took, I put on like a little, it's basically like an intraday iron condor. All that means is if I can bring my option chain up here, I'm looking at price to stay above this level and price to stay below this level. And I need this just to be for today. So if this happens, and this is my center price right now. So if price, currently at these levels, I have about a 94% chance of profit. And that's on the call side. And on my put side, about a 93% chance of profit. So if I am right and price stays within my market maker levels and my expected move today, then I should be able to walk away with 40 cents credit on the trade, which gives me $40 a contract. So I'm going to try to take that trade. Let's see here, $4.60 risk. All right, so that trade is in. All right, let's move on. So keep an eye on that one for the morning. Dollar Swiss looking good. Currency strength. Dollar reigns supreme for right now. Swiss getting weaker. I love that. They did cut rates more than expected a couple weeks back, which I was happy to see. I don't know if that necessarily means that everything on the Swiss looks good. Like Aussie Swiss obviously doesn't look too hot. I'm still in Aussie Swiss. I'm still enjoying some positive swap, but man, I got to see some better price action here, right? So I mean, there's nothing really get excited about. It's like we might hold this level on Aussie Swiss. We might have some type of like falling wedge scenario if it takes a long time. I'm just going to mentally prepare you. Like, don't be shocked if somehow the Aussie Swiss and some of these others that established this August flash crash, if somehow this thing just keeps going lower and lower and lower and lower, and we get back to this flash crash level. To me, that might be like, oh my gosh, I wouldn't want to hold that trade long. Well, to me, I would. And to me, I'm going to. I don't mind looking at this level and saying, look, 20, 30-year lows on the retail charts. This to me is a better opportunity to buy than it is to keep forcing sell trades. So I'm not going to force sell trades. I'm going to keep buying small. And then once I get my confirmation, and maybe it's now, like maybe this level is a, little test of the lows, a little of a bear trap of the lows, and then it starts to work its way back up. Well, if it does that, we have a little bullish pattern, then sure, maybe we have some stacked up orders. All I've got to do on my Aussie Swiss is stack these things up out of the way. And if price goes my way, there's a lot of money to be made with confirmation. If price goes against me, I'm not adding a bunch of trades. I'll just add near the flash crash low and I'll test another level there. I'll lower my cost basis. I'll wait, figure out my break even, and I'll look to see, is this going to offer up a bullish pattern? And if so, can I trade that bullish pattern as well as comboing a bullish pattern? Let's say that we come to this low and we get a nice little bullish pattern here, and we can take that all the way up to the larger structure, right? I mean, I would say that this profit target, if we come down and test the lows again, that this should be my profit target. And as long as my cost basis, which has been built in here and built in here and built in stacked up orders here and trendline breaks, like that profit target should offer still plenty of money. And if I lower my cost basis a little bit, then it offers a little bit more. So anyway, it could be an ongoing saga for 2025. I don't think that I'm necessarily wrong on these Swiss crosses. I just clearly have waited way longer than I thought. So to be continued, but has it helped a bunch of my Swiss pairs? Not necessarily. It's a swap trade right now. It's positive carry. That's paid me a decent amount, anywhere between 3 to 5% just by holding. I'm not really in big drawdowns. I've had enough positive swap to essentially wash away my entire drawdown, but obviously I want pips and technicals to go my way so I can get paid on the trade itself in addition to the swap. Okay, dollar CAD, we already talked about it. To me, it's going towards 4,500. I've got to take profit set at 44.80, and I think we're going to hit it this week. I think there's enough drift in the markets that we'll hit 44.80 this week. We'll probably hit 4,500. We got a 2020 and a 2016 high at 4,600, so don't be shocked if we hit that either. I'll add up the pips here. I mean, probably if I'm taking a trade from I've got like 7 positions in. So all these trades add up. There's probably 3,000 or 4,000 pips of profit on this dollar CAD if I'm right. Okay, other Swiss cross. Let's go back to CAD Swiss. Same type of thing here. Would it suck to have it hit the flash crash low? Like, it wouldn't be great. I mean, we are holding a lot of structure in here, which is nice, but we haven't taken out a high yet. So this is just a build. I don't know. Maybe it takes a while. Maybe it comes down first. Maybe it's a liquidity sweep. Then it comes back up for a bullish pattern. I'll watch the low. I'm telling you, though, this is what the Forex market does when it gets really tricky. And this is what kills a lot of traders. Traders that aren't prepared for this thing to come down to this low, they get in aggressively or they get in stop losses here, right? And it goes boop, and it stops them out and then goes their way. Or it comes down to this low, and then that's the flash crash that goes through the flash crash, and then it comes back here, comes up. My least favorite thing about trading Forex or futures is all these tests and sweeps of liquidity highs and lows. You all know what happens anytime you've ever seen a trade that hits your stop loss and then goes the way you thought it was going to go. That is a hunt for liquidity. Your stop loss is in the way. You are the liquidity. So either figure out a way to trade smaller and not have that stop loss sitting right there, or wait for better confirmation and the move, hunts liquidity and then goes with confirmation, and you're not going to get the best entry that way. You can't trade tops and bottoms that way, right? But so it takes an incredible amount of discipline to not buy support and not sell resistance, because you're like, well, if price bounces off of that, I'm just going to wait for it to give me all my confirmation to take the right trade. Fine. You're going to feel like you miss out on entries by, hundreds of pips if you're looking at higher time frames. So I just trade smaller and I build, and then I stack my orders when I get a lot more confirmation going my way. That's why dollar Swiss, dollar CAD, I'm in, 20 plus positions on dollar Swiss, and I'm in 7 positions on dollar CAD. I like them. They were good trades to me, so I'm willing to take a bunch of trades. Other pairs, I dabble, like Aussie Swiss has probably 8 to 10 trades, CAD Swiss similar 8 to 10 trades, Euro Swiss probably has 15 trades, dollar Swiss is over 20 trades. I liked it more, but that's just how I trade Forex. All right. Anyway, Japanese yen. The reason I was looking at Japanese yen was, here's JPY futures. So /6J is my futures feed. I am going to start looking at something in 2025. If the Japanese yen futures comes back down to the same levels we saw back in July and August, I'm going to start looking at some established defined risk on Japanese yen futures. This is a trade for me that I don't know if something breaks again. I don't know if we have another segment of deleveraging out of the Japanese yen. Maybe we do, maybe we don't. But I will take defined risk trade. And the reason I'll do that is because I can be wrong on the yen, which in currency land, I'm typically like, I'm like the most cynical person trading the Japanese yen because I hate it so much. But in defined risk option trading for the futures market, if I could just buy a bull call spread there, so there's no assignment risk, this thing could go to literally zero or go to infinity. And I've got defined risk where I can say, okay, I'll take 1% risk here. If price goes up, boom, 1%. And I can get full return on capital. Right? If I'm wrong, I'll risk my 1%. So what I might do is take like a 0.25% trade and stagger out my expirations and have 0.25%, another 0.25%, another 0.25%, another 0.25%, and just see if this area is going to hold lows and I give myself more time. If price goes up, all these trades get profitable. Right? So I could take, let's say, 1% risk and get 1% reward, or even get it where if I put it in such a way, I might actually be able to get like if I risk 1%, I can probably turn that into like a 1.5 or better, and then I can trade a little bit more directional. I can just go straight up futures contracts, but I'll probably keep it defined risk. But I'm going to watch this Japanese yen futures trade. I don't know. Something tells me it's a trade. It's going to be an interesting trade for 2025. I don't think it's all about the dollar. I think the dollar has a run, but the dollar at some point is going to offer up a fantastic shorting trade. Everyone that's getting hurt by the dollar right now, the problem with most traders is that they can't stay in the trade. They're getting hurt by the dollar. It's causing more pain. It's, drawdowns are more severe, and they just get annihilated. Or if you're dollar strength, good, stay dollar strength. I think there's more to come, but I'm more excited about where's the bigger trade. Right now, it's like my dollar CAD is only 50 pips away from hitting a take profit that I'm done. Like when dollar CAD hits 145, I'm done. I don't care if it hits 146. I don't care if it goes to 150. My trade's done. Okay. If dollar Swiss hits 9,200, I'm pretty much done on that trade too. So I've measured moves to like 96 and 96.50. I don't know if we're going to get there. I hope we just have a better range. But other than that, it's like, I'll assess. I'm not going to chase the dollar. If I wanted to chase the dollar, it was like find the bear trap that we had back in September and then ride that squeeze when we had the October breakout. That was the better trade. Right now, I'm just trying to participate in what looks like, dollar strength. But you're late. You're way late. This is like 7th inning dollar strength. So if we go higher into that like 8th and 9th inning, yeah, there's more profits to be made, but I'd rather, see the start of a new game. I'd rather see the bears take over. I'd rather see the dollar get weaker, and whatever that trade looks like, I want to be a part of that. So that's what I'll be watching. All right, what else? FTSE, Argentina. I've been watching closely to see if I get some reasonable pullbacks. I'll probably look to trade this one in the deeper moving averages. Hang Seng is down slightly. I still think, I don't know. I'm just going to make a forecast for 2025. I still think China is an interesting area to be. It's diversified. It's non-US. It's non-correlated. But it's not great. Like China still. We're wondering on their animal spirits. We're wondering on their commitment to lifting property markets and supporting the capital markets. It takes a lot of talk. It takes a lot of action. The domestic market is not really picking up like the international market. Nobody likes to invest in China. So I almost feel like government lifts animal spirits and then encourages the domestic market to step the heck in and buy some stuff. They've tried. We've had some pumps, but they've been, the phrase is pumping. Is it pump and dump in stocks? Kind of, I guess. Um, but had a big rip in September and then it faded. We had another rip in December and it faded. So I'm obviously a little skeptical. I'm not calling the short on China. I'm just saying I just think we need more time. So we may not have a lot of evidence on China until maybe March, when there's more of a kind of an explicit plan for how they're going to continue to roll the stimulus out into the new year. EWZ is Brazil. I'll sit on that one a little bit longer. Apple, we actually hit an all-time high today in Apple. Amazon, after a little bit of an FOMC sell-off, got some protection in case it gets worse. I'm out to February with some puts on Amazon. I also covered out to March, all the way up to 220. I might end up doing a roll on that, trying to roll it up and out. I still want Amazon. I mean, it's Amazon's a $225 stock. I know there's volatility ahead. Maybe we pull back into 200 or less. But if you give Amazon time, I know there's strikes going on right now, right? Like Starbucks, Amazon, and some other, I'm sure other like retailers, like just trying to leverage these strikes to time up with the holiday season and try to get their bargaining power. And honestly, I feel like most of the companies do not disrupt business. Or like, whatever. Here's something, right? We had the port strike earlier, like within the last 3-4 months. Now you got some holiday stuff. I mean, who knows? I mean, whatever. People just want to make more money. I don't think it's that hard to understand. Unions are tricky business. Whatever. I'm going on a tangent. But Amazon, I still like Amazon. I think Amazon eventually is going to be $1,000 stock. I would gladly. I've had this question a lot. Chris, I'm going to trade for the first time. What do I do? I mean, if you want a dollar cost average, this to me is a no-brainer. Whatever you can afford per month, per quarter, per year, toss it in Amazon. It's a little bit more risk than just trading the index like the S&P. But do I think that Amazon goes up to $1,000 in the next maybe 10 years? Probably. So if you like some promising upside, I think this is a pretty good way to trade it. I think you could build a very successful trading plan with just putting in what you can afford, not having to overcomplicate the strategies, not have to time this, but just stay consistent. I think Amazon is a stock that will, be $500, be $1,000. That's got a good upside potential. All right. Anyway, Google, where are we at? Google, after the big run for the quantum computing story rip, I think, what is it? Google's Willow. That's what it's being called right now. So it's fine. I mean, I've got some bull put spreads and some bull call spreads out to expirations in 2025. I'm looking to see if we continue to grind higher on Google. Meta, this actually is awesome that we're having a bit of a pullback. I hope there's more to it. There is a very, very nice bar count on my Meta. So I think this one is up to, I want to say, close to like 400 plus bars, similar to what NVIDIA is. And we are at around about 475 bars. So to me, I think that we find this moving average before we hit the highs, similar to NVIDIA. So if we come back and find this moving average, I'm going to start looking for another income trade. So it usually looks like this. I either do a ratio spread where I'm willing to say, look, I'll take shares of Meta. If I could own Meta at $400, do I think this is another $1,000 stock? Probably. And what am I going to do on that? If I take any ownership, I'm going to collar these things where I know that Meta has pulled back, 70, 80% before. 2022, Meta was down 76%. Everyone was like, oh, they're spending too much money in augmented reality in the metaverse and they're going to lose everything. Facebook still makes a ton of money, right? Meta still makes a ton of money. It is a Mag 7 for a reason. It's almost like on autopilot, But point is, if the implied volatility goes up, I'm going to start selling a bunch of premium and try to generate some nice income trades. I wouldn't mind owning shares, but we're at probably this $400 level. That's previous all-time highs as well. So I'd like to see something like that where we could build a technical case for this becoming resistance and support. Anything in ownership in that level or cheaper gives me a nice little discount. And if we do get back to all-time highs, then there you go. Okay. All right. Microsoft, all-time highs are a little bit higher away. We had some chop in here. I still am wondering where we're getting. Like maybe this is support, resistance. Either this keeps grinding up to these highs. Probably some range trading, to be honest. This high, this low, it just finds a way to kind of work its way up to those levels, but I don't know. Again, it's hard to hate on Mag 7 stocks. It really is. Now I don't necessarily want to put my entire portfolio into them, but it's hard to think like this stock is going to go to zero. Like I just think that yes, it may not go up to infinity in the next 12 months, but I think that there is such solid growth. It's a pretty much a staple to everyone's portfolio. Is it highly concentrated? Does it require these, S&Ps and QQQs to be rebalanced? Probably at some point they should, because right now, like over a third of the SPY and over a third of the NASDAQ is like 7 to 10 stocks. It's not great. So I don't love that high concentration, but it's hard to argue against Microsoft and Google and Amazon and Apple, you know. So yeah, I get it that Buffett sold a ton of Apple. He's coming out. I think there was an announcement last week, like everyone that Buffett's a big name in the business, obviously, and people are watching like what he's buying, and so OXY got purchased. That's an energy play. I do have some exposure on OXY. It's at 47. So, I mean, I've got it covered out to 51. I did a roll. I think I put that in my broker last week. I did that on one of my live sessions. I did a roll. I think I rolled it down to 50 and out. Let me check my positions here. So down and out in time. So OXY. I rolled it down to $50 and out to January 31st. So now I have this at the 131 expiration and the $50 covered call. And if I get it called away, I still make, I don't know, like 76 cents a share, 80 cents a share. It's really an income trade. So if I make like 80 cents a share, 500 shares, I still make a $400 income trade. And price doesn't really have to do much other than stop going down. And it's at a fairly attractive level. I mean, when I looked at this one with Frank back in September of this year, I mean, I said like, yeah, we could hold this level around $50, and I tried to repair it and try to lower the cost basis, which I did. Now my break even's like $49, but I also said like this thing could pull back into $43. I'm way more attracted to it at $40. But we're sitting at 47 and change. Like this might just be like a slow bleed to the downside. Okay. If this just goes like low, 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 like that, like comes down to like $43, I just want to keep lowering my cost basis. I think this will have a decent little bounce for me to repair it. I'd try to at least make, $500 to $1,000. If I'm doing these little income plays and flipping stocks, I like that $500 to $1,000 winner. That's what I'd like. I didn't get that last week in NVIDIA because I didn't get assigned. NVIDIA is at 136. I needed it to stay above 130, and it did. So I grabbed some income there. I still have a 138 by 137 for this Friday. If price is able to get back above greater than 138, then I will not get assigned on NVIDIA, and I'll take another 50 cents credit per contract. I still look at this as a potential head and shoulders trade. That could just be like noisy neckline, and then we still flush down. I will say this in NVIDIA. I like the stock a lot, that if we come back to the 200 moving average, I'm going to start trading some income on it. Probably adding in some just straight up shares, probably doing like a 1-1-1 or doing a ratio spread. If it starts out as generate my income with option trades, if I take any assignment, cool. If it's income trades, I'm going to try to make a few $1,000 on it. So NVIDIA comes down to my 144, 200 moving averages. I will be establishing additional positions. Tesla, a little bit of a reality check. We were just shy of 500. This thing has made an 80+% surge after the election, like crazy. I have levels pending. I'm going to buy some Tesla at 362 and 285. I know that might be asking for the market to do things that may not do, but if we pull back to a 21 or a 50, I might get filled in that position. This is another stock where I would say, look, if we get up into 500 plus, that's a pretty good return on capital for whatever that position is that I get filled at 362. And if also we're talking about, Tesla's going to be $1,000 stock at some point in the near future, then okay, I've got some asymmetry. I've got some upside potential. Make sense? All right. Yen might be worth looking at again on Thursday after the Tokyo CPI. That's fine, Lee. I'll take a look at it. And like I said, my trade on the Japanese yen is probably going to be Japanese yen futures. Right now, let's get into some of the macro stuff. The 10-year, 4.56, recently up to 4.59. Remember that little The Fed has kind of messed the markets up in this regard. Okay, the Fed cut rates. Here is the bottom. Okay, and right now this is up 97 basis points. What percentage did the Fed cut rates? 100 basis points, and the 10-year yield is up 97 of them. So basically the bizarro trade is the Fed cuts rates, the 10-year yield says we're going the opposite way. This is where financing is going to be in 2025. Everything from 5-year to 10-year to 15-year to 20-year to 30-year financing in this country, okay, auto, cars, debt restructuring, it's all going to be based on the 10-year yield. It is doing the opposite of the Fed. The Fed has now issued that, hey, we might pause. Well, restricting by the Fed, meaning that we're not going to be cutting more rates, hopefully starts to narrow the gain of this 10-year. If we have something like this in the 10-year, maybe a little bit of broadening pattern, that would be okay. I still don't like the idea that this thing is going to stop going up. I think this still is a potential trade that makes things worse. It makes things far worse than it does make it better. Now, I don't know if that's going to happen, but man, there are some big names that are betting hard against bonds, and they're long yields and they're short bonds. And those are some big names. You've got your Paul Tudor Jones, you got your Stanley Druckenmillers, you got some guys that have made a fortune over their careers, like having some big bets like this. It's got traction. It's already obviously done the exact opposite that the Fed has wanted. So we'll see what it ends up doing. But that's why I have 5 and 6% of note, because unless this makes a drastic improvement, we're going to see some interesting, like, it's gonna basically be the reason that growth it stops. Like, it's gonna freeze the consumer, and it's gonna freeze corporate debt, and it's gonna make borrowing harder because it's more expensive, and that in essence is gonna take growth and chop it. You're gonna choke out growth, and you're gonna freeze the consumer, and that right there is recipe for a big slowdown in the U.S. And the only other argument would be like, well, the U.S. is going to be this AI thing, and everything's AI. Well, if sentiment is crappy and people are making less money and businesses have less money coming in, and they can't refinance debt, they can't work with money, there's no growth anywhere. So I don't give a crap about AI if nobody's growing. AI eventually becomes like the margin trade later when things are recovering again, but all this could stop. So I just keep saying, if you're watching the DXY and you're watching the US 10-year, you got a pretty good idea of where to be positioning. Risk on, risk off. I get a little bit more nervous on how bullish the stock market can get if the US 10-year continues to climb. Okay. Average mortgage right now, 6.72, continues to go up. We're back up in the high sixes. We've made like very little progress on that. Futures market, that's currency futures. Somebody asked about platinum, palladium. So I have it. Here's palladium futures, watching. Here's platinum futures, watching. I have it on my charts. Like I said, I just don't have the ability to trade it through Tasty, and I'm not opening up a separate futures account. So, but it's attractive enough to be interested. I just don't know, where. So if we come back to like just anything in this yellow box, then yeah, if I could do defined risk on platinum, I'd be long. But we have gone sideways for essentially, outside of that little hiccup in COVID, platinum has been sideways since 2018. So look, at some point, like, sure, platinum at some point is going to be, I would think a winning trade, right, to the upside. Speaking of winning trades, I actually did take a little winner today. All right. I'll update that in a second. What else? Anything else? Platinum. Eventually, it's long. That might not be a trade that I could participate in. What else? China stuff. HSI. Baba. What's up with Baba? Besides what I got to go do later at the hospital. If you don't know, I told Nick this morning, but I had a kid this weekend, so he's literally 1 day old. Well, he's like 9 months and change, but officially in the world, he was born Sunday morning at 1:00 a.m. So on fumes, man. Alibaba, $84. Yeah, just keep an eye on this one. Baidu, same thing. I own some shares of Alibaba, some shares of Baidu. I own some shares of JD. I'm working my cost basis down for some income, doing a lot of rolling here. I think JD, I've got it out to January 3rd. Okay, $39 January 3rd on JD. Okay, good. And Schwab dividend, Schwab growth. I'm going to keep a close eye on those as well. These are dollar cost average mechanisms to me this year as well. And how many stocks are back above the 50 period? We went from like 18 and change to Friday's pickup day. This is last Friday with PC print. We printed lower. We opened lower, right? And then the market recovered a little bit on Friday. Here we are with now about 25.5% of the stocks in the S&P up above the 50-day. So to me, this is a buying opportunity. Not now. I'm saying if this gets worse, if we see less and less and less percentage of stocks above their 50-day, then I'm going to start looking for an opportunity to buy. It's one of those like bigger like macro themes of like this market's so just like it's just really swung from extreme greed to like extreme fear, and the crazy part is it barely moved. Like the market's down like 3-4%. And we're talking about like really all these stocks, but it's because so many stocks in the S&P are underperforming. The last month, it's like we had the initial November pop, and then the last month you had most of those election moves get faded hard, and most stocks pull back. Mag 7 was the only thing that kept going through the election. The only thing that kept going, right? Bitcoin, yes, but Bitcoin's pulling back. Bitcoin's 10, 13, 10 to what? 10 to $15,000 off the highs, Mag 7 is the only thing that's been making consistently new highs, and a lot of other stocks are not. So anyway, what's this? NASDAQ, same thing, above or below the 50-day. So I'm just watching a couple of these macro things. And that is probably going to do it for me today. So a couple things for this week. I'll go back to like the main asset here. Look, it's a holiday. Not yet, but officially like Christmas Day, limited market hours. A1 trading team. I'm not sure what the stream schedule looks like this week. I'm good for today, tomorrow, Thursday, Friday should be okay. I think I should be officially home. Hopefully by Christmas Day we're officially home. We have like it's a weird kind of like probably 48-hour window for like official hospital discharge, making sure everything's good. But I mean, it's holiday trading, little volume. I don't think the market's going to really give us any crazy fireworks this week or next week. I could be wrong, but to me, it's doubtful that we take out Friday's low, and I think it's doubtful that we take out the all-time high. So I think what the market's going to be doing is once more volume returns in early January, that's going to be the next big flow. So is it high, low, lower, high, lower, low? To me, that is two things, right? That's buckle up for more volatility. That's buckle up for whatever, some drama ahead. And it's also a better opportunity to get the cleanse that you want early in the year to then see if you can get a nice position for a nice gain to get back to those all-time highs. I think the harder trade is going to be if the market just kind of, grinds and climbs this high volatile, choppy, like wall of worry. That's going to be a challenging environment to me. Okay. Now I say that, but it's like, yeah, you can do some out of the money puts. You can sell some options, you can generate some income, but it's like if we climb that wall of worry, my concern is that at some point, maybe second half of 2025, maybe into the end of the year, that this actually breaks and it gets worse. If you look at the statistics, every year you typically have like a 5 to 10% correction. Every 2 years you have like a 10 to 15% correction. Every 2 to 4 years you have like a 15 to 20+% correction. We haven't really seen a big correction. We had a 10% correction last year on the SPY. That was during August. That was as bad as it got. 5% was April, 10% was August, 4% was literally last week. That's as bad as it got as far as the drawdown goes. So I don't know. I'm just saying, be ready for anything. I want to make next year very profitable as always. I think to do that, I'm just going to have to assess. It doesn't, to me, and it's just personal opinion before I go today, it doesn't feel as easy as what it has been since the bottom in 2022. I was ready to see some technical bottoms. I was ready to see some price moving. We had lots of space for recovery in late 2022. 2023 was a very solid, healthy bull market, and it was built on the story of Mag 7 and built on AIs that got us into 2024. But for the last 2 years, it's been a pretty easy market. And it has climbed to the wall of worry. We haven't really seen the hard recession. But again, watch the dollar, watch the 10-year yield. Let's see what the macro theme looks like. I want to be on the right side of risk off if we have it. And I will navigate to see like how aggressive I want to be in risk on. I don't know. I think we've had a great 2-year run, and I'm just not trying to get greedy. I'm not assuming that just because it's been a good 2 years, that's going to be a great, third year, fourth year, fifth year. That's rare. That's rare to see bull markets stretch the way that they've done, having 20+% gains. I think if we do end the year, so next week as we go into New Year's, if we end the S&P over 20%, that's only the third time in history that we've had back-to-back 20+% year gains. So I don't know. Call me realistic, but it's going to be something to watch. So we'll figure it out. That's the best part. We'll figure it out. I just want to be on the right side of risk off and not be blindsided. And if we see risk on, I'm just going to assess like, how can we make money? Is it like risk on in the sense that everything's going up, or is it risk on in the sense you got to be a trader? You got to generate some income. Maybe that's my plan. I think I'm more along the lines of I'm going to be an income trader that makes a good gain out of that versus like I'm just bullish and buy and hold and it's all going to be easy. I think it's going to be less easy. Okay. Less easy. But who said it was easy? If it's easy, everybody could do it. And they can't, because when the market goes down, people lose everything because they're stupid. Okay. So don't be stupid. All right. Happy Monday. I'll see you tomorrow. Thanks. Bye.
Thank you for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want to get put on the nice list this year? Then make sure you check out the A1 Stock Box. That's all for today, everyone. We'll see you tomorrow. Ho, ho, ho.